piece of shit. All right. So yeah. Anyway, so I was just putting this target I'm looking at. We're talking about point of releases. So for me in this position trade, I've got this position on from that we were talking about earlier. From initially it was at 38888 down here, but as I've managed it, you sort of get this creep where the position, you know, average price starts to creep up as you're managing it and taking profit and pulling in. So right now it's at this level, but ultimately, kind of the macro target I'm looking at is this 56,000. A lot of guys talk about point of release. A lot of guys trade a point of release. Well, this one, is kind of a macro point of release, if you will, and where you get this type of price behavior on a daily chart. Where the macro structure really starts to break down, and yeah. So in my mind, that's very significant on a very significant macro level that I'm really eyeballing as a target on this trade. And I want to manage a good deal of risk if we see a rally up to that level, because this is really a prime candidate for a lower high, right? If we do go into a bear market, say it runs up here and into that point of release on the macro we identified, and then sells off, and then starts creating lower lows on the monthly, well, then you've got your swing high with surrounded by two lower highs. It becomes a little bit different picture on the macro. So that's an area where I definitely want to be very aggressive in my profit taking. Of course, I'll leave some to ride, but that's really kind of the place I'm framing a little bit of my take profit strategy for this position trade. Uh,
Yeah.
Nil, you were going to say something? I think I cut you off a little bit.
Oh yeah, I mean, it was something. I just, while I was listening to you, and I was looking at the chart of Bitcoin on a daily time frame. I just remembered that you're talking about upper targets, right? And I was like, to me, the next level of interest would be around price run up above into the 49, 49 and a half, something like that. And you already got, I think, an order there. I can see that.
Yeah.
If you look at that pocket of liquidity, and if you look at price behavior, in the month of March. Now, this is a daily time frame, of course. If now you could open up another chart, and if you could go on the euro dollar 1 hour time frame, you would see that is essentially the same behavior. And euro dollar eventually went up to test the same pocket of liquidity you can see on a Bitcoin daily chart.
Yeah. So you got to help me out here. Where are we looking at?
Yeah, but just go on the hourly time frame on the euro dollar.
Oh, I see. I see what you mean. Yeah.
Yeah, I
So you
mean,
talk.
it is exactly the same pattern. You got a base, a run up, comes back to the base, it runs up again, comes back, hold the new base which is created above the previous, and eventually, I think the euro dollar actually traded up in the ultimate pocket of liquidity, and then it retraced from there. But if you look at Bitcoin, it's just a different chart because it is a daily chart, but the behavior is essentially the same. That's why I'm calling for maybe a retracement a little bit lower on the daily time frame of Bitcoin, but eventually I think it's going to test into 49
Yeah. I mean,
around, yeah, around there, yeah.
yeah. I think kind of the way I framed the trade idea was that with volatility in mind. So I interpreted this as compressed volatility relative to previous volatility. So I think my expectation going into this trade was that you would see a great deal of volatility, right? That this compression would kind of expand dramatically, and despite the kind of price movements that we've seen already, I don't really think we've seen that yet, right? I don't think we've seen kind of that, that volatility that I was looking for, particularly. We've seen a move up, right? But you you really get. this grinding against resistance, this kind of accumulation at resistance, classic signature, and then you get the pump up into it. But you're not really seeing that face melting rally that was kind of, that people love Bitcoin for, and that is kind of the foundation of my trade idea to try to get that. Now, of course, I want to be securing account equity as I'm doing that, but I'm really looking for the rally. I do agree with you. I'm looking for the rally up into this level, but I'm also really focused on sort of a little bit more of aggressive rally up even to this level, even maybe a little bit higher. You know,
Yeah, long term, why not? Yeah.
yeah. But I'm definitely looking at this as well, and at the very
Do-
least, to just offer a reaction. And
Exactly. That's why I usually try to think about the next level. So although I could have a macro thesis or a macro view, I'm a very short-term trader. So I don't look to hold two positions for like a week or a month usually. So I'm always focused to the next level. And so I do trade the market from one level to the other. And I usually collapse the entire position I have on. It's very hard for me to keep going, keeping the same position for a long amount of time, because I think that, as you were saying, it's going to offer a decent reaction most likely. So I would probably have the chance to get in the market again in the same direction.
yeah, well, these are kind of tying back into what we said yesterday. These are good areas to hedge, right? Your position. And
Yeah,
me and DJ were, so these are point of releases, right? That we've identified on like a daily chart. So, and me and DJ were kind of going through like an hour ago. We were going through different charts and looking for point of releases. And when Bitcoin's in an uptrend, we kind of noticed that you didn't get a lot of them. Like you didn't get a lot of point of release trades. You did get a few, and the few you did get were pretty high risk reward, or very good trades essentially. If you had the patience to wait for them, but you didn't get many, so you have a situation where like a lot of times most point of release trades are, in my opinion, are going to be counter trend, right? So you're going to see a lot more. For example, if you have a bull rally, right, you're going to be testing a lot more point of releases on the sell side. And Bitcoin
yeah,
generally doesn't, when it rallies, doesn't test those bullish point of releases that often. It does a few times, but not often. But these are still great trades, right? And kind of talk about what we were going into earlier. The opportunity to hedge. Um, these are great hedging opportunities.
yeah.
At
Very,
the
very, very good points you're making. Yeah,
and the idea with a hedge being that if, and again, I don't have the opportunity to do it on this paper trading account because it's not a futures account. So it's a little bit limited in that regard. But if you do have the opportunity to hedge, then these levels, especially this level, is an area where you could you could see a macro reversal if that's how the market's going to go. And then if you hedge it, then you have an opportunity to build a position to participate in that scenario played out. And then you can build on that type of deal.
yeah. Agreed. I'm basically on the same line as you. Yeah,
I think I'm so my trading approach is a little bit different than how I feel bullishly. I mean, I'm just like maximum bullishly, right? But I think Bitcoin's going to go to 500,000. You know, that's my opinion. Well, of course, I don't trade my opinion. I have to have a different methodology when.
yeah. A wise
Yeah,
man told me never trust your guts.
yeah, exactly. Yeah, 100%. So yeah, I don't allow that type of mentality to seep into my trading. Right, I try to be constantly managing whatever position I'm in. Um, Now, of course, it does. The position I'm in does inherently align with my, my internal bias, but that's okay. As long as I'm, actively managing it, pulling in profit, managing risk and profit, like we got here with these stops here. and playing it dynamically like that, um,
Yeah.
it's a good way to temper your bias.
Yeah, I guess a good way to sum it up would be don't let the bias infecting your thinking, right?
Yeah, yeah. I mean, you know, especially if price runs up to like this ultimate take profit, then especially and I actually made a video about this, but some people would be looking at this as like some type of you have an inside gap here. I don't know if you would consider this area here a fair value gap, but a lot of people would be looking at this as a liquidity void. And if you have a pretty impulsive run up into a liquidity void like this at such an obvious level, it's a great it's a good time to take profit and step away from the market. Like and typically, say this did play out like that and it did run up to this level, and you took your profit there. Um, there's a good chance that price is going to stall here, and so even if you were in a long position and took a good deal of profit there, and you came back to the market with fresh eyes in a few days, a lot of times this you know price is going to give you another opportunity to get long if you need to. So this, in my mind, this area just represents the ideal area in the market to try to reset your bias if price approaches there, of course.
Yeah, I do agree because you look at that swing, the last swing before the aggressive move down. That swing that you have at 52. I do agree with that. It could be above that. There could be a vacuum, of liquidity. So price, if it starts to trade above that, it could run pretty quickly up into the 55, 56. Yeah.
Yeah, and it's just a good area to reset your bias, because if price runs up here, you'll see um, people suddenly be interested in taking long positions there, and it's just probably not a great idea to do that. So
I think it would be the classic scenario when you start, going over to Twitter or the news, and everyone will start to talk about Bitcoin. Bitcoin is back. The bull market is back. Those are not usually, those are not good periods to enter long. You know.
no, kind of like how down here, right? Everybody was calling for 20K down here. You know,
Yeah, essentially, yeah.
so
I mean, I was actually calling not really for 20K, but honestly, because I told you, I was expecting some sort of a sweep of a raid below 29, 28. We didn't have that. And, the thing that convinced me that we weren't going to see that, it was the dump that we had, at the end of February, the day the Ukraine war actually broke out. And we
yeah,
had
I
that
remember
massive
that.
move
Yeah.
down, and it was reabsorbed very, very quickly.
Yep. Yeah, I wasn't trading that day. Um, because I didn't have the balls to trade that day, but I was watching, and so I do remember exactly what you were saying. Um, but yeah, I found it interesting that when price made all time high, very few people were warning or thinking about the possibility of price declining by 50%. You know, I mean, it
Yeah,
just wasn't a common thing
yeah,
to think about. But then once price did decline by 50%, now all of a sudden everybody's saying, it could, yeah, it declined 50%, but it could decline another 50%. Yeah. So
yeah.
all of a sudden people are
It's
entertaining that idea here, you know?
I mean, those were actually pretty good example of how the herd kind of think, and how people which have been exposed to the market, develop a different way of thinking. And I think I'm on the record because there must be a video in the 4 or 5 that I recorded where I actually go through those two tops put in. The first top was, coincidentally, it was around Coinbase IPO, and the second top, it was when Powell came out announcing the intentions of a rate hikes.
Oh yeah.
So you got structure, you got points, of liquidity into the market, you got behaviors, you got price action, and you got the news catalyst. So it was perfect.
Yeah, I find it really interesting that so this market top was, like you said, marked by Jerome Powell threatening to raise interest rates. I mean, really, it was like the November FOMC meeting, so I think it was November 5th or something, basically right there. And I think it's just interesting that if you noticed, the low of the market where we saw that expansion was actually, or the beginning of this rally was when they actually raised
March
interest
March
rates.
March 16. It's always the same. Like you know, it's not like it works both ways, but because you can have the market rally, before when you have the rumors and then selling off on the actual news release. But it works both ways because you can have the market dumping while you have the rumors, and then reversing and starting to rally when the news is actually released. So it's always the same dynamic, right?
Yeah, it's just weird how like it actually plays out that way, like to the exact number. It's weird. But
Yeah, if you look at the calendar, it kind of seems like it is magic, but it's not. It's just that I think you need to enter in that mentality where no matter what you think or what other people tell you, but the market knows. The market knows in advance because usually the type of news which can really impact the market for the long run, they get priced in very, very in advance. Did you notice that?
yeah, I've noticed that too. Yeah, especially yeah, like in this example, it got priced in. Yeah, way ahead of the actual event. So we're talking 5 months. You know, so
Yeah.
yeah, I mean that's a great example of that. I think probably you'll see that happen with the halving in Bitcoin, I would assume, because everybody knows that, uh, you know, the type of effect that halving has on the price. And, well, people who aren't, who know what's going on would know that that is a massive impact on price. And so there's a big incentive to front run it. So I think you'll probably see that as well a little bit. But again, we're not very close to the halving. We're like exactly as far away as from 2 years away from the next halving, so that's not really on the radar.
Yeah, we got time to think about
Yeah,
that.
yeah, exactly. It's not getting priced in yet, so um,
It might become relevant when we start to be like 6 months away, something like that. I could say.
yeah, it gets if you're especially if you're in a bear market, right, and the halving's approaching, it's kind of like, well, if you've already been in an extended bear market and day by day getting closer to the halving, it's probably not a good idea to be building massive short positions.
Yeah,
Probably a good time to be unwinding some of those, if you were smart enough to have them on. But yeah, man, I don't really. That's really my only opinion for what is going on in the market right now. I don't want to get ahead of myself and predict, what will happen after X happens, and go down that whole rabbit hole of one thing happening after another. I kind of want to stay focused on this one thing that I'm seeing and I'm in a position for, and not really try to extrapolate beyond what I'm seeing in that trade.
yeah. As I told you, for me right now in Bitcoin, I got like three levels. I'm really putting attention on. The 42K level to the downside, and below that, the 40K even, and above market price 49.50 basically.
Oh, nice.
Because up to the upside, that would be my next target, and at that point, I should reassess to kind of taking a step back and see what happens next. On the downside, I will have 42 as potentially a buying opportunity, managing risk below 40K even. So those are the only three levels I'm looking at right now. And in between, it could happen whatever. You never know in advance what kind of a price delivery you're going to have. So I just focus on three levels, and I maybe interrupt the market if and when the market reaches out into those levels.